Good morning, traders. Welcome to today's analysis from Sven. Before we start, stay until the end because there will be a multiple choice quiz based on today's breakdown. It's a quick way to test whether you're really understanding the price action and liquidity concepts we go through every day. If you find value in structured gold analysis like this, consider subscribing for daily XAUUSD breakdowns. Now let's talk about what happened in the market. Yesterday we saw a very aggressive sell-off in gold, with price dropping sharply and clearing a large amount of liquidity on the downside. That move created strong displacement and multiple inefficiencies across the chart. But during the Asia session today, gold has already rebounded roughly $70 from the lows. That type of rebound after a heavy sell-off is important because it can signal one of two things. Either the market is correcting the inefficiencies created during the drop, or it is starting a deeper retracement after liquidity sweep to the upside. Today's analysis will focus on understanding whether this move higher is just temporary correction or the start of a larger shift in momentum. Let's break the chart down step by step. The first thing we do every day is we mark the previous day high and the previous day low. This is the PDL at 5015.045, and this is the PDH at 5175.950. You can see that the high has already been taken. These two levels define the most recent daily liquidity range. Yesterday's low is especially important because the level represented the sell side liquidity and it was aggressively taken during the drop. When the market clears that much liquidity, it often creates conditions where price can either continue expanding lower or retrace after a liquidity grab. Now with Asia session rally, price is beginning to move back into yesterday's range and it has taken the PDH. So the key question becomes, will it reclaim value inside the range or will the move stall and continue downward? Next we zoom out into the daily time frame. Large impulsive moves like yesterday's sell-off usually leave clear imbalances and inefficiencies. These areas represent zones where price moved extremely quickly, meaning the market did not have enough time to trade efficiently. Over time, markets often return to these areas of imbalance to retrace and rebalance liquidity. So if the Asia session rally continues, the market may fill some of these higher time frame inefficiencies created. But if rally loses momentum early, it may simply represent a temporary correction before continuation. On the daily chart, the market has tapped the 1 day CB. We've marked this. That being said, it has not been tapped so far. Another important inefficiency that we can see, which the market has supported time and time again, is this buy side imbalance, which is also marked in yesterday's analysis. These are the only reasonable inefficiencies on the day time frame that we can mark for now. We now move on to the 4-hour chart. So yesterday's downside displacement left this sell side imbalance. Though it has now been filled, so we can remove this. You can see today's rally already filled this sell side imbalance. So we delete this. We now look for what could be reasonable levels where the market can react from. You can see the number of times this 4-hour SIBI has been tested. This is what is currently pushing price down. So anytime the market actually cuts through this, it could mean that the market has broken the previous resistance. You can see this is the only sell side imbalance, and today it has made a buy side imbalance, a very small one though, but it is there, right? Ensure to always mark this very accurately. This is a 4-hour busy. Right? There are no other inefficiencies, which you can see. So if price rejects and retraces back into this becomes a very important reaction point, because this was formed in today's trading session. This was formed in yesterday's trading session, but this is relevant for today's trading session. So if price begins filling the void slowly and holding inside it, this can signal a shift towards rebalancing or consolidation. The 4-hour chart helps us understand whether this Asia session rally has real strength behind it. We can see that it is reacting from the SIBI, so it has moved up, yes, with strength. That being said, it is also being pushed down now. So we now move on to the 1-hour chart. Yesterday's sell-off created quite a few inefficiencies. You can see one here. This is a 1-hour busy. Buy side imbalance, sell side inefficiency. There's one more here which the market actually reacted to today. This one. You can see the number of times it was tapped. And we can see another one having been formed here. So these are the BCs. So if price continues climbing during London or New York sessions, the market may fill those inefficiencies step by step. A sharp rejection could signal continuation of the bullish move. But if price slices through the imbalances cleanly, it could suggest the market is rebalancing after an aggressive up move. We now look at the volume profile from yesterday's session. The key level here is the point of control. So as usual, we look for Sunday at 1800 hours. This is the start of yesterday until Monday 1600 hours. So we use this to mark our value area high, previous day's value area high, previous day's point of control, and the previous day's value area low. The key level here is the point of control, the POC. The POC represents the price where the highest volume traded during the previous session. When the market moves aggressively away from value, it often later rotates back towards POC. So if today's rally continues, the POC should act as a natural magnet where price finds balance again at 5094.47. However, if price fails to approach or reclaim the POC, that could suggest the market is still strongly bearish and not ready to return to value. So if the price comes here and it moves back up, then the market could continue bullish. But if the price breaks this and holds below, we could continue into the value area low or further down. Finally, we mark our psychological levels. But before that, we will also mark today's. So today started at 1800 hours. Right? So this marks today's as the market moves. So we finally marked our psychological levels. Round numbers are extremely important in gold trading because they attract large amounts of liquidity. These levels often act as reaction zones, liquidity pools, area where stop losses accumulate. After a strong move like yesterday's drop, psychological levels above the market can act as retracement resistance. You can see it went up to the 175, beyond the 175 level, but 175 pushed the market back down. After this retracement, the market could continue down. So today, watch how price reacts when price approaches these levels. Now we have also already seen reaction from the 175 level. We will now next see how the price reacts at 150. Further, we look at 125 and then 100. These become important. Every 25 point or dollar difference is an important psychological level. So today, watch how price reacts when they approach these levels. A strong rejection could signal sellers stepping back in, but clean acceptance above them could indicate the market is stabilizing. In essence, yesterday's market action was major bearish displacement, but the $70 rally during the Asia session shows the market is now reacting and possibly rebalancing. Today, the key question is whether price will continue retracing and begin filling yesterday's inefficiencies or stall and resume the bearish momentum. The answer will come from watching how price reacts at imbalance levels, volume profile levels, and liquidity levels. After large moves like yesterday's sell-off, traders often make the mistake of chasing the market. This is where markets trap traders. Instead, wait for liquidity sweeps, clear displacement, retracement into imbalance zones, and confirmation before entering. Patience and structures are what keep traders consistent. So today's focus is understanding the reaction after yesterday's major sell-off. Watch carefully how price behaves around imbalance zones created during the drop and the imbalances formed on its way up, volume profile levels, psychological liquidity levels. Trade patiently, trade with structure, and avoid chasing the market. I'll see you in tomorrow's analysis.